Hey traders, checking into the stock market today. Bulls continue to play defense even in the face of some significant bearish reactions to some fundamentals. Can the Bulls hold on and remain within tightening ranges into next week? I'll show you what we need to see. Also going to do some in-depth trade review of what I was doing today. All right, so I headed into this morning attempting to be flat, meaning not a bull lean or not a bear lean. I do have long-term positions that I have SPY, one of them. And I also have a swing position in MSOS that I've talked about a couple times the last week or so. So that was my long exposure. And so I was protecting against that with an SQQQ position that I've had over the last couple of days. And so what I'm going to be going over here, intermingled with the technical analysis of the day and looking forward, is essentially how I'm navigating the swing trading space and how I pair my day trading based off of that. Because every single trade that I make in a day trade does have some impact of what my other positions are. There's no vacuum where the individual trade that I'm making is the only thing on the table. So for example, we headed into this morning with the financial sector starting its earnings reactions and a bearish earnings reaction from, I guess it was JPM. Just want to make sure of that. So yeah, JPM bearish earnings reaction. So okay, the financial sector is breaking its tightening daily range bearish, which increases probabilities for me that other names are going to break their tightening daily ranges bearish as well. So I headed into this morning positioned not ideally. I was starting the day red from my swing positions because SPY was weaker, because the financial sector was dragging it down, and the NASDAQ was stronger. So my hedge was in the wrong spot, choosing the stronger sector to be short. So I know I'm going to start the day in the hole and in the red. Not significantly, one half day maker, 1 day maker, and I'm right back on top of things. So it's no big deal overall, but I just know I don't have enough bear exposure right now. If we're going to break our daily supports and roll over into a bear trending day, I definitely need more bear exposure. I also knew that I was not going to be at the computer from about 11:30 to 1:30 today, right in the middle of the day. And so for me, that was a factor as well. Have to be aware of that. So I started the morning watching SPY. And again, in the back of my mind, what have I been saying the last 2 days in these videos? We drop on the morning. We set our low pretty much between 10 and 10:30. We bounce for multiple hours. It's been dumps the previous 3 days. Today was a decent little dump, 1% from the high of the day to the low of the day in the first 30, 40 minutes of trading. So I had that in my mind as well. But entered a bearish position first thing in SPXS on the initial 15-minute drop, exited a third of that position, stuck my stop over the high of the day, risk-free, can't lose. If we keep dropping, I am now fully protected, and that position was big enough to then give me a little bit of a bear lean. So break even stop and just let it play out. Wasn't going to do anything else with that. From there, we then had the S&P 500 futures chart break support. So the daily equilibrium had a bear break. Oh man, look at that fake out, no follow through. How could we possibly not have been faked out by that move? Well, we know the NASDAQ has to break as well if we're going to get any follow through. The NASDAQ had more space to work with above support. The NASDAQ held support. So we know, I was watching QQQ low of yesterday very closely. First thing at 280, and then as soon as it broke, posted in the chat room, remember, the low of yesterday's CPI reaction happened pre-market. It's not the QQQ level we care about, it's the futures level that we care about, and we held that support. So now we have a tightening range forming, where essentially we've got high of the reaction, low of the reaction, lower high, held support, and now we're testing that resistance level. And you can see we're right up there. And if we roll over into consolidation after hours here, we're just going to have a 4-hour equilibrium and tightening range. And again, after all this volatility, certainly wouldn't be surprising if a 4-hour equilibrium does shape up. So we'll see if the bears show up overnight to set that 4-hour lower high and keep us tightening. But the bulls defended support. And so just looking at some of the chat here. So at 10:14, we will not see much more notable downside in SPY today unless the NASDAQ breaks the low of yesterday, the low of the CPI reaction. And that was the low of the day when I said that there. And again, that's, I'm not able to predict this is the bottom. and bulls are in control from here, but I'm able to position myself mentally to not be surprised if we shift momentum. I would not be surprised if momentum shifts, because if the NASDAQ holds support, we're not going to drop much further. Well, what if the NASDAQ holds support? Can't other sectors show us weakness and take down the S&P 500 further? It's possible, but it's not likely, because at that point in time, the financial sector was already down over 3% on its earnings reaction. So what's the probability that the financial sector and the healthcare sector, which was also down over 1%, maybe even closer to 2%, what's the probability that those two sectors can drag the S&P 500 down further if the NASDAQ bears are not participating? Probability is very low. So for me, that meant protecting, or I should say, exiting some bearish positions. And like I said, at that point, I had to stop, break even for my bearish morning entry, which I stopped out of while I was away from the computer. So no loss there. And as soon as I stop out from that, my shift goes back to the long side, even being away from the computer. I also took a bearish trade, and this is an example of how quickly a trade presents itself to me. So other day trades I was taking, I was watching the SPY 1 minute stair step drop on the morning on this initial move down, and I'm gonna look, I know I'm not gonna sell my bear exposure. I'm gonna let that play out. I'm either gonna stop out, break even, or I'm gonna hold it all day. So not even thinking about that position anymore. I have no more action to take on that position. So I see this 1 minute stair step drop from the high of the day, and it's a lower high every single 1 minute candle for the S&P 500. And I decide I'm going to try a bounce play in the biotech sector when this 1 minute stair step pattern drops. Why? Because the biotech sector has been seeing significant bounces and significant relative strength recently. And that bull break took place at 9:42. So I bought LABU very shortly after. Might as well pull up the exact time that I entered. So LABU 942.09 is my entry at 865. And so let's just use LABU at that point in time. Low was 863. So 942, I buy, because the S&P 500 just started to see a short-term bounce, and the biotech sector here very quickly goes. That's a 3% move in 1, 2, 3, 4, 5, 6, 7 minutes. So I sell half real quick, and I then put my stop under the low, risk-free. So I now have a bearish position that I entered that is risk-free, and a bullish position that I've entered that is risk-free in the first 12 minutes of trading. So I know one of those is likely to stop out. The other one is likely to remain profitable. We then saw that bounce, and as soon as I see that big of a bounce in that short of a window, like I said, I sold half real quick, and entry was 865. I sold half at 873. So now my break even is 857. So I stick my stop loss there. Don't want to look at that yet. And then I wanted to sell real quick, and I missed this, and we pulled back. Missed it. I wanted to exit my whole position. You give me 3% in 5 minutes trading in a downtrend, anticipating that we're just going to form a lower high compared to the high of the day. I say, darn, I missed it, and then I got a second chance. And so this little bounce back up, I sold everything. And so I was out of that little bounce play. So sold half at 873 and sold the other half at 879. So that's an average of, what, 876? So 865 to 876, over a 1% gain. Just a quick little bounce trade. So all right, now done with the biotech sector. Look at how fast I changed my mind here, because I was talking about this in the chat room. And so I just posted, all right, I'm all out of that long trade. Any temptation to play it bearish? And Timber is pointing out a shift in the correlation. We're always watching relative strength, relative weakness. And I say new low of the day here would make the bear correlation stand out, blah, blah, blah. I played it for a bull flip and probably done with it for the morning. And I literally said that. I don't have the exact time that I said that, but less than 2 minutes later, I was in a bear trade. After saying I'm probably done with it, 2 minutes later, I'm back in a trade. Now, does that show a lack of discipline? No, in my opinion, it does not. What it shows me is a trade smashing me in the face and saying, this is a very clear, low risk, high reward trade. And you've taken this trade 700 times in your trading career. You should take it 701 times. So I was watching the 2-minute time frame on the biotech sector. And what we were talking about at that point in time was this right here. So we had the high of the day, low of the day, lower high, higher low. And at that point in time, this big bull spike just happened. It doesn't look that big, but if you look at the 1-minute time frame, it was fast and hard to get right up to resistance, just straight up from 831, and in 3 minutes, it's almost a 1% move. Now, if this move had happened slow and steady with a little higher low and higher high on the 1 minute to get back to resistance, I'm not interested. But it shot straight up. And so I top fished it. And so I entered LABD, and that was entry at 27.45, out half real quick at 27.70. Again, just risk-free right away. So that's a 35-cent gain. So let's look at LABD. 27.70. It was right here. Nope, what did I enter? 27.45. So here was the low at 27.40. I'm in at 27.45. I sell half at 27.70. So my break even is 27.10. I can put my stop under that level. And if the 2-minute equilibrium in the biotech sector breaks bull, I stop out and don't lose $1. And if it does not break bull, and if it rolls over and that relative weakness continues to present itself, then I have another winning trade. So that now is 3 trades in the first 24 minutes of trading, where every single trade, I sell a partial position fairly quickly to be in a risk-free trade. And I held that, and we dropped down to the lower low, and then scaled out, I forget exactly where, but exited that for a decent little trade. 28.15, I sold the other half. So average ended up being maybe 27.92. So 27.45 to 27.92. Again, another little 2% trade. Then later in the day, a 5-minute falling wedge presented itself. I did not take this trade, but it ended up getting some nice follow through. Bear breaks lacking follow through. So new low of the day by 11 cents straight into a bounce. New low of the day by 12 cents straight into a bounce. So nice little falling wedge bull break. So why did I flip to that bear position? Number one, the very clear top fishing play, low risk, high reward. And number two, I was observing the healthcare sector. Look at the healthcare sector losing the daily higher low pattern. And so that to me, I said, XLV, previous lead bull of all the major sectors, has lost its daily uptrend. This heightens my observation for the biotech sector to lose its bullish correlation, because the biotech sector and the healthcare sector are often, logically, they trade similarly. And so if I see weakness, if I see our lead bull general sector, which has been healthcare the last month, starting to weaken, I look at the lead bull growth general of the biotech sector and keep an eye out for it to start to weaken. If this inside bar breaks bear tomorrow, our daily lower high is set, and we have to be cautious of failing the daily bull flag and entering weekly consolidation. But overall, it was just a little day trade. So I think that's all I did on the morning before leaving the computer. And then I stopped out of my bear morning trade on the S&P 500. So now I'm back to a bull lean. And just like that, it's been a nice green day. And I offset all of my swing positions that were down. And then, of course, the cannabis sector got a nice pop, which is where my other swing exposure was. So big bull spike in correlation there, which we'll look at in just a second. But that was how I traded today. And it's one of the days that, you know, things were flowing. Things were very clear. I had a firm grasp on what all the sectors were doing. Obviously, those trades were going well. And there are definitely plenty of days where, you know, I'll fumble the first trade or the first 2 trades and I'll just say, nope, don't have it today, I'm done. So it's always more enjoyable to show a flow state day, but obviously the other kinds of days happen as well. It's just a much quicker pull the plug as far as, you know, I can tell when I have it and when I don't have it as far as clarity and flow. And today was flow state. So in the end, if you told me 2 days ago, let's go 2 days ago on the S&P 500, up here, if you told me, hey, we're going to see a bearish reaction to CPI tomorrow, and then the next day, we're going to see a bearish reaction to the initial financial sector earnings, what is the probability that we're going to be holding daily support and remaining within a tightening range? Given that information, I would say 10% chance. Yet here we are. Granted, SPY broke, but the NASDAQ did not. QQQ is maintaining a daily equilibrium. So that's extremely impressive to me. Bulls are doing a great job playing defense. Now, they haven't done much to prove offense in a while. When's the last time the NASDAQ saw a clear daily uptrend? And as far as a higher low and higher high, we haven't had one in a very, very long time. Even this move, nope, just a straight shot, no daily trend change. Just a straight shot up, no daily trend change. Same thing, straight shot up, no daily trend change. So, we've played defense well. Bulls are playing defense, I'm impressed. But I'm remaining skeptical until bulls go on offense. If the NASDAQ can break this tightening daily equilibrium bullish, it will be the first clear uptrend on the daily time frame that we've seen in probably, I'd go back to say almost of the year. Where's the clear daily higher low and higher high on any of these bounce attempts? And I just don't see one. There are big bounces, but no clear higher lows and higher highs. And look at the EMAs. We did get that bull cross with that straight shot up, but they're leveling out and they would cross bull if this pattern breaks bull. Now that being said, our resistance is still a ways away. We need 3.5% more just to even get to test resistance. So I'm not holding my breath that the bulls are going to move here and break resistance. I'm open to that possibility, but I am impressed that they're holding on. The hourly doesn't have an uptrend right now. And again, the NASDAQ here is just an hourly equilibrium. And if we reject from resistance, we're going to look to continue to tighten up. And SPY, same thing. Big move off the lows. But look at yesterday. It was the same thing. Big move off the lows. We did give it all back. So the bulls have to confirm an hourly uptrend to us if we're going to be confident in this daily support level holding. Semiconductors benefited from NASDAQ relative strength today. They're confirming a daily trend change. So bull break of 209.90 on SMH is a good sign. Weekly bounce trying to follow through again. So we have seen a couple little higher lows and higher highs in this sector that lacked follow through. But it's notable if the NASDAQ bulls, again, the NASDAQ is such a driving force in the market. As I've said many times, the bulls want the NASDAQ to be leading the way to the upside. The bears want the NASDAQ to be leading the way to the downside. And today, obviously, they were not doing so. When the NASDAQ is strong, it helps growth. It helps semiconductors. Who else does it help? I think that's about it. And so semiconductors definitely benefited from the NASDAQ strength today. So we're certainly paying attention to that. As far as individual semiconductors, NVDA is showing me relative weakness because it's not testing that resistance yet. AMD, same thing, not breaking resistance. MU, still not breaking. Who was breaking resistance today? Why was SMH so strong? I know Nancy Pelosi added to her NVDA position. I would have to go in and look at the holdings and see who in the semiconductor sector, because it's not those three major names, and those are really the only major names that I watch for that sector. Interesting. So SMH broke resistance. All of the three major names I watch have not yet. So if I'm an SMH bull, I need NVDA and AMD and MU to all break those resistances as well to follow through. Tesla. So Tesla trying to set the daily higher low inside bar today. It has to break bull. If the inside bar breaks bull, we have a new benchmark level and a new daily higher low at 675. Earnings coming up. Google, daily higher low trying to form. We gave back a lot. Because of how much we pulled back here, we are going to be looking for a daily lower high to be the result of the next bounce. And Amazon was the other equilibrium we were watching. Inside bar, if it breaks bull, the higher low is set, and we continue to tighten the range. NASDAQ cannot have a convincing higher low on the daily without the Amazon bulls breaking this inside bar bullish. Apple has been showing us it is the tech bull general for a long time, and here it is today continuing to show us that at the highest levels that we've seen in 6 weeks, less than that, 5 weeks. So again, Apple is a lead tech bull general. If we start to see our lead bull general show us signs of weakness, it's a red flag. So watching that very closely as well. Microsoft was a lead bull with Apple back on, what was that, Monday, but that changed very quickly as well. So Apple's trying to do it alone, but Apple needs help. And so I'm looking around at these other major players, Microsoft, Amazon. Is anybody going to help Apple in the tech sector? And it has to be Amazon. Amazon has to break that inside bar bull if we're going to have any confidence that the NASDAQ is setting that daily high or low. It's going to be a long video, huh? Wow. We're going to speed up a bit. So biotech sector, as I mentioned, inside bar. If it breaks bear, we have to be cautious of weekly consolidation shaping up. We're continuing to watch that correlation. XBI divided by SPY shows us a little bit of weakness. Just a weak day, second weakest day that we've seen in this correlation in the last 2 weeks. So we're paying attention, but one day is not enough to be meaningful. Financial sector. So bear break. We have more financial earnings tomorrow. Next time we bounce on the daily, we're just going to be looking for a lower high. XLF is the lead bear general for our major sectors. So the NASDAQ, or actually healthcare is still one of the lead bulls. Nowhere near its recent fear low. Financial sector, fresh fear lows. Lead bear general. We can watch a downtrending resistance line. If you like diagonal lines as visual guides, I'd be putting it something like that. But we're just watching the daily downtrend there. So lead bear sector. IWM trying to set that higher low and remain within the tightening range. Good sign for the IWM bulls that they held daily support, even though the financial sector dumped, because IWM does have exposure to the financial sector. Have to break the high of today, tomorrow, and confirm the hourly uptrend if we are going to see continued tightening daily range. MSOS. So cannabis today got a big spike. A couple headlines came out. Something about a bill going to the Senate. It needs 60 votes. I mean, we've had this time and time again where I'm not getting my hopes up for any progress in the government, but it gets some headlines. And because the sector has been so bearish and because the shorts have had it so easy, that headline leads to a spike and to short covering. Look at TLRY. TLRY today traded something like $200 million. And again, it changed the daily trend. We're now in a daily uptrend, and the weekly bounce is getting some follow through. So it squeezed shorts in the short term. The question is, will it get any follow through? So we're going to keep an eye. There was another bill, the SAFE Act is being added to NDAA. Honestly, like I get the one sentence headline. That's all I care about. I'm not letting these headlines influence my trading decisions. I'm letting price action dictate everything about my trading in this sector. And so I choose TLRY for my day trades. And I did take one day trade today, but I didn't post it, so I don't want to talk about it in hindsight. But essentially, saw this lower low lacking follow through, and I had just sat down at the computer again after returning from being away from a couple hours. So I did play this little move here. But just a little day trade there. And MSOS, I was away from the computer when the spike happened, so wasn't able to do any maneuvering as far as taking any profit or whatever. But I'm still in this position that I've been talking about the last week plus, and it's got an average at this point. I had a 70% position, average 1020. I added 30% back yesterday at 1104. I think my average is in the 1030s. I would have to do that math, but daily trend change confirmed. The volume is there, the nice strong close, but zoom out. We know we're just looking for a weekly lower high. Weekly EMA 12 has been rejecting the price for 7-8 months. So that's going to be the first major hurdle, and that level is still over 10% away. So I've got a position that I'm comfortable with thanks to the double bottom at 10. It's a core position. It's the kind of size where it's worthwhile, but if we were going to get confidence in the broader market, headline momentum, social media hype, I would easily go 300 times or 300% more position size, but we're just not there in the sector. I don't have the broader market confidence, so I could play the double bottom at $10 and play this bounce, and it's going well. But again, just as far as position sizing is concerned, I'm not calling any long-term bottom. I've got exposure where if we shift momentum and everybody was on one side of the boat bearish, I will benefit, but going to take it one day at a time, and I'm not comfortable adding. I did attempt to add today, but exited it break even. If I held, it would have been worthwhile, but just going to be patient with the sector. I have some exposure, and that is how I'm letting it play out. Other growth names. So we're still watching these daily uptrends and tightening ranges. CRWD, PLTR. PLTR closed weak. Again, we're watching for the potential of a daily lower high to be the result of the next bounce. ARKK. So growth itself still not showing a ton of strength this week. And it's just a question of, does this headline put enough pressure on shorts to see multiple days of follow through on this move? The dollar is still strong, but pulling back for 4-hour consolidation. Daily bull flag confirmed. Just like energy. Remember when energy monthly time frame looked like this? And I was looking bearish on energy, and I was too early by a week or two. But it's the same thing. The dollar is going to top out temporarily, and we're just going to look for a weekly high or low. But finding that top is going to be tricky. Bulls have full control. And again, another thing, I can look at the broader market and say, if you add that into the mix and say, well, the dollar is going to go up all week, what are the chances that we're going to remain within tightening daily ranges? Still impressive that bulls are playing defense, but 4-hour uptrend is our guide for the dollar. It's keeping the metals weak. The metals had a nice bounce yesterday. We gave it all back. Can't confirm a 4-hour uptrend. We're due for a daily oversold bounce. We're just going to look for a lower high. Silver getting crushed. Metals are getting crushed. And it doesn't matter. The only thing that matters is dollar strength and metal weakness. And those have to flip-flop if we're going to see any kind of meaningful bounce. Weekly RSI on silver is now oversold. So again, we're going to anticipate a bounce sooner rather than later, but I'm not confident enough to be scaling in, and it's not a trend that I'm going to fight. Dollar is strong. Miners gave it all back as well. Daily bear flag confirming. Bulls are hoping for a volume climax. Again, we're due for a weekly bounce in the metals and miners, and we're due for a weekly pullback in the dollar, but there's no sign of it yet on the short-term time frames. Energy dropped to the lower low, lacking follow-through. Bulls are hoping that's a falling wedge shaping up, but we're just going to pay attention to the daily lower highs, which are a nice clear guide. Oil still holding. Need a 4-hour trend change back to the bulls. Nice bounce to save that downtrend support line. If we bounce, we're going to scout a daily lower high, but I am paying attention to this falling wedge for the rest of July. Natural gas. Got a little channel here. This was the original uptrend resistance from the rising wedge that broke bear and got a lot of follow through, but a very impressive bounce from the bulls since then. So what did I do? I got rid of the support line, which is no longer valid. The resistance line is absolutely still in play, and I just adjusted my uptrend line like this. So nice visual guide, and aggressive bears playing off this resistance because the bull breaks are still lacking follow through. Bull break straight into the pullback, bull break into sideways consolidation, bull back into consolidation. So the bull breaks are the place to be shorting, but just have to be protective because this is a wild one, as we know. Keep an eye on uranium. Commodities are getting trashed with the dollar's strength, but the uranium bulls are doing a great job of defending $20. Look how tight we're getting here. Volume spike today. 2264 key resistance. We're still in a weekly equilibrium. So we've got this weekly equilibrium, and we've just been trying for a month to form a weekly high or low. And so if the dollar tops out and gives us any kind of meaningful pullback, I think that's going to benefit the uranium bulls who are holding well. And there's still a downward pressure on commodities and uranium from dollar strength, in my opinion. And I do believe that that weight will be lifted when the dollar tops out. So the simple statement for me is, if CCJ is still holding $20 support when the dollar shows us some signs of some actual pullback and potentially weekly consolidation, I do believe that CCJ bulls are positioned well to see a nice 10-20% move from here. Even if we remain within a tightening weekly range, if we break this tightening daily range bull and we top out at 25, that's still 15% from where we stand. So keep an eye on CCJ, still tightening up. It was all bulls today. I'm interested in the next hourly consolidation to be looking for an entry. Tons of space for an hourly high or low. All right, a lot of info in today's video. That's what you get on flow state days. All right, Feel free to ask any questions. I appreciate you watching. Do good things. We'll see you soon. Crypto. Bitcoin and crypto formed convincing daily higher lows. Look at Ethereum here. Very convincing hold of support and heading back towards resistance. So again, we look at the broader stock market, very similar, but we don't have that bull move up back to resistance yet. So stock market bulls are hoping crypto is giving a little bit of a lead.